Most of you use the moving average crossover strategy with the 20 and 50 settings. But have you actually tested different approaches? Or are you just copying everyone else? I'm not saying the strategy doesn't work, but most traders never go beyond them. They stick with the crowd because it feels safe. I've tested moving average crossovers, single MA, single EMA, and many other models you've probably never heard of. Today, I'll show you how to find the best method, along with the best settings. Stick with me. Game plan, history of moving averages, 36 alternatives, best method and settings, S&P 500 algorithm. Before we talk about its history, I need to explain how we use it. There are many ways to use moving averages. Some traders use two, and when the faster one crosses below the slower one, it signals a sell, and vice versa. Here, we make it even simpler by using just one line, called the baseline. If the price closes above the line, it's a buy signal. If the price closes below the line, it's a sell signal. We can all use moving averages differently, but their history stays the same. Moving averages is one of the oldest tools in technical analysis. It dates back to early financial markets when traders needed a simple way to smooth out price. The idea was straightforward. Take the average closing price over a set period and plot it as a line. This helped traders see the overall direction of the market. But over time, traders noticed a limitation. The simple moving average reacts slowly to new price changes because it gives equal weight to old and new data. That led to the creation of other types, like the exponential moving average, which gives more importance to recent prices so it reacts faster to market changes. Later, more variations were developed to solve different problems, such as reducing lag or adapting better to specific trading styles. What kind of baseline would fit your system best? Something like this? Or maybe like this? The only way to know is to test them all. 36. Alternatives. When I started trading, I only knew the default moving averages on MT4. That was it. I used two, like everyone else. Then I came across VP's video where he explained why he uses just one moving average. It clicked right away. Simpler, cleaner. I made the switch and never looked back. From now on, we'll use a single yellow moving average, which we'll call the baseline. After months of backtesting the four main baselines, I thought that was everything. Turns out, I was wrong. Years later, I discovered what might be the most powerful baseline tool I've ever used, the all-average indicator. It gives you 36 different moving averages methods, all in one place. I won't go through all 36, but here's the key idea. Some baselines stay very close to price, like the Hull moving average. Before I show you, let's adjust the visual so it's easier to see. Go to Colors, change all three lines to yellow, and set the width to 1. Then set the last two colors to none. As you can see, it tracks prices very closely. And then there are baselines that stay further away from price, like the original version T3 by Tilson Moving Average. Now think about this. This is only with settings 14. What if you test lower settings with the T3? Or higher with the Hull Moving Average? Possibilities are endless. If you test period 10 to 150 across 36 models, that's over 2,500 combinations. That's more than 2,500 different ways to approach the market. What are the chances one of them fits your system? Very high. But here's where most traders go wrong. They use the same baseline for everything: Forex, crypto, even the S&P 500. That's the problem. These markets don't move the same, yet traders apply identical settings across all of them. It doesn't make sense. Everyone uses SMA 50. But why 50? Why not 49? Why not 67? There's only one way to know. Test it. Test it. Test everything from 10 to 150. If SMA doesn't perform well, move to EMA. Then try Wilder Exponential Moving Average. Then go through every available model. At this point, you might be thinking, you want me to test all of that? One by one? Yes, because how can anyone claim SMA 50 is the best if they've never tested anything else? Now let me show you the most efficient way to backtest 150 settings across 36 models in just a few minutes. This will completely change how you see baselines. Best model and settings. Normally, backtesting 5 years of data with just one setup can take weeks. Now imagine testing 150 periods across 36 different models. That's over half a year of non-stop backtesting. The NNFX Algo Tester does it in under 5 minutes. If this is your first video on the channel, quick heads up, this might feel overwhelming. Start with episode 22. That's where this series begins. You'll understand everything a lot faster. For those already following along, you know we already have our first confirmation indicator, the absolute strength histogram, with settings length 38 and smooth 7. Today, we're adding the next piece, the baseline. Our goal is to find the settings that work best alongside this absolute strength histogram indicator. Let's get to work. Go to nnfxalgotester.com and download the all-average indicator. Copy this. We will use it in a second. Now, go to MT4 and open the Algo Tester. Go to Expert Properties. First, uncheck Input 1 and enter 38 for length. Same for Input 2 and enter 7 for smooth. Paste the all-average parameters. Change period to Input 3 and method to Input 4. Switch baseline, none to all averages. Check the box for Input 3 and change Start to 10. Step to 2. We're going to test period by a jump of 2. Stop 150. Check the box for Input 4 and change Start to 0. 0 is the first method or the SMA. Step to 1. Stop at 35. Scroll down and set baseline entry exit to true. We'll be entering exiting trades based on absolute strength histogram and the baseline. I'll explain that in more detail later. Click OK, then start. As you see, the Algo Tester will run exactly 2,556 combinations for 2021. That's testing periods from 10 to 150 in steps of 2 across all 36 methods. From there, compile the results for 2021 to 2025, just like I showed in episode 23. I'll fast forward this part and come back with the results. While we're here, I just want to warn you that this is not a perfect system. I built it quickly for educational purposes. If you want an algorithm that truly fits you, you'll need to take the time to build it yourself using the tools I shared with you. The automated backtesting and compiling are now complete. Let's go to STO to find the best results. Sort total profit from highest to lowest. Among the top returns, there is only one pass that was profitable in all 5 years, so we'll use pass 847. Go to any single year dataset, press Ctrl+F, and enter 847. As we can see, we'll use period 140 for input 3 and method 11 for input 4. Now, I'll show you exactly how our two-indicator algorithm works together. S&P 500 algorithm. We're using the absolute strength histogram indicator with settings 38 for length and 7 for smooth. For the baseline, we're going to use settings 140 for period and the double exponential moving average by P. Malloy as the method. You can save this as a template. Now I'll explain exactly how this algo works in the simplest way possible. Every time the absolute strength histogram flips, it can signal either an entry or an exit. Every time the price closes above or below the baseline, it can also signal either an entry or an exit. For entries, you only take the trade when both indicators agree. For exits, you only need one indicator to go in the opposite direction. Here are some real examples to make it simpler. Let's start with July 11th, 2017. The absolute strength histogram turns bearish. Is the price below the baseline? Yes. Since both indicators agree, we would enter a sell trade here. However, this trade would have been exited on the next candle. Why? Because the absolute strength histogram flipped back bullish, which is a signal to exit. Next entry, July 14. The price closes above the baseline. Is the absolute strength histogram bullish? Yes. Since both indicators agree, we enter a buy trade. Next, August 3rd. The price closes below the baseline. Is the absolute strength histogram bearish? No. Since the indicators do not agree, we skip this trade. Next candle, the price closes above the baseline. Is the absolute strength histogram bullish? Yes. We enter a buy order. Next setup. The price closes below the baseline, but the absolute strength histogram is not bearish. We skip this trade. There are no signals until August 17. We get a short signal and the price is below the baseline. Since both agree, we enter a short trade here. I think y'all understand the idea. If both indicators agree, you take the trade. If they disagree, you skip it. If one goes the opposite direction while in a trade, you exit. Adding more indicators does not make the strategy much more complex. You only need an extra second to visually confirm whether the signal is valid or not. We already revealed 2 from the list. In the next video, we will have a third one which will eliminate even more losses and add big winners. In conclusion, A baseline is a trader's best friend. It helps you clearly see where the trend is going, and it keeps your decisions simple and rule-based. In this video, we explored a variety of moving averages, and the goal isn't to use them all. It's to find the one that fits your trading style and stick to it. If you got value from this, make sure to hit the like button and subscribe so you don't miss the next videos where I add a new indicator to the algorithm. And if you have questions or want me to test a specific indicator, drop it in the comments. I read all of them. I'll see you in the next one. Let's work. Disclaimer: I'm not a licensed financial advisor. All content on this channel, including videos, tips, and signals, is for educational purposes only. Trading Forex, crypto, and indices involves a high level of risk and may result in losses. Always do your own research and consult a licensed professional before making any trading decisions.